In the last video, I told you that I was going to make a follow-up video about investment psychology because of the importance of really understanding investment psychology to making wise investment decisions. So the principle I'm going to discuss is actually one that I discuss in great detail in my new Smart Wealth program, which we're going to release early in 2015. And by the way, you can go check out what that program is about. It's basically an educational program that gives you all the insight that is not provided in any of the traditional business schools anywhere in the world, any of the MBA programs anywhere in the world, any of the PhD, economic PhD programs in the world, the traditional kind of academia, because that type of academia is totally useless to understanding how the real world actually works. So the principle I'm going to talk about is confirmation bias. Now, confirmation bias is a process whereby we discard all the information that conflicts or opposes our beliefs, and we selectively pick and choose and cherry pick all the information that supports our beliefs. So it's a very harmful type of mindset, but it is something we can certainly avoid if we learn to identify it, because all of us do it. So in the arena of gold and silver, here is where confirmation bias comes in, because there's so much information on the internet, and there's a lot of great information, but there's a lot of crappy information about gold and silver too that is put out there for free. And even myself, of course, because we have a business to run, I only put out maybe a sliver of information that I provide to my paying subscribers, and I'm not going to provide any type of specific strategies for free on the internet. So what I look to, or how I view the information about the gold and silver markets that is out there in the internet, it's kind of like gold and silver mining stocks, right? There's hundreds upon hundreds upon hundreds of them, and I always tell my members probably like 90% of them are 95% of them are garbage, and only 5%, because there's only a few dozen every year. When I go through the hundreds of gold and silver mining stocks, there's only a few dozen that I ever end up considering. So that's kind of like the information out there. So you have to be really schooled in gold and silver markets to really understand what to discard and what to ingest and internalize and use in your investment decisions. And if you don't have that expertise, then you're going to be misled by that wealth of information that's out there, because 95% is rubbish and 5% is good, as far as, it might even be less than that, as far as what is out there for free in the internet. Now, interestingly enough, a lot of people don't look at information as a valuable commodity, although it should be, because if anyone has a friend that owns a restaurant, you don't walk into that restaurant asking to eat dinner every single night for free, because you understand it's a valuable service, valuable commodity, and your friend can't afford to give you free dinners all the time, even though it's your best friend that owns that restaurant. But that's kind of what people have come to expect, in the information world, unfortunately. So they always try to just extract information for free on the internet. But like I said, that is a dangerous proposition because of the psychological principle of confirmation bias. Now, I said that one thing that I've noticed a lot in my free newsletter is that anytime I say something up towards the fact that there's more evidence, more proof that bankers are manipulating gold and silver prices in the paper derivatives markets, I noticed that a lot of bankers unsubscribe, which is fine by me, because I'm not in a business where I'm trying to help out bankers anyways. And since they're the ones that are working for this industry that is morally bankrupt and the enemy of humanity, as far as transferring wealth from everyone else just to the top executives at their big global banking firms, it's fine if they leave. But a lot of times too, I will note that on my YouTube videos or my newsletter, if I say anything remotely negative about gold or silver, because it conflicts with people's desire, people that are investing in gold and silver, for the desire to gold and silver for gold and silver prices to go higher, of course, which is what they want. If I say, oh, look out, like I did, before the November 30th Swiss gold vote. I said early in the week there's going to expect lots of volatility. And I said that the bankers will slam gold prices down into that vote, into that Sunday vote, because they do not want rising gold prices as any type of encouragement for people to vote yes. And that's exactly what happened. But yet, people will downvote my videos where I'm saying this because it's not what they want to hear. Again, it goes to confirmation bias. You discard information you don't want to hear, and you just internalize people that say, oh, well, maybe the Swiss gold vote will pass, even though it had a 0% chance of passing. So people will say maybe it will pass, and if it passes, then gold and silver will soar on the yes vote, and that's what they want. They'll seek out articles that say that. So that's why I think there's obviously websites about gold and silver that always positive, like optimistic to a fault, because I'll say last October 6th, I believe it was, when there was a big spike in gold and silver, they said, oh, the bottom is definitely in now, buy everything gold and silver because the bottom is in. And then gold and silver plummeted like further, and then on November 7th or 8th, around that time period, again, another big spike, same message, oh, we missed October 6th, but now it's definitely in, the bottom was not yet in. So that's how it can be harmful, because these type of sites that are always always have a super unrealistic, in my estimation, not only in my estimation, factually, it's been unrealistic, because they're always saying the bottom is in, now is the time to buy, and they've been wrong a lot of times. Now, it's not a matter of being wrong. Everyone's been wrong. I said I've been wrong in the past as well. But it's a matter of never having a kind of contrary viewpoint of the consensus. So it's saying like never that you should be out of gold. So now is always the time to buy, because we have been out of the mining stocks for a long time now, because I've been very bearish about gold and silver. And there's only one period we entered very briefly in November, and we exited, I believe it was after like a week, we exited the mining stocks, because we had made between a 3, 4, and 12%, 12.5% a gain, I think was the largest on our stocks, in about 5 or 6 trading days. So we got out. And that was before the Swiss gold referendum, when prices got slammed again. So the fault of confirmation bias and a lot of these sites that are not very realistic, I think, is the fact that it feeds into this confirmation bias, and it feeds into the fact that people think, oh, everyone in the gold and silver community are like this. No one is realistic, and that is very wrong. That's just a wrong view, because I know I'm not the only analyst out there that will take hedges when we believe gold and silver is going to go down, or that will basically provide a lot of cautionary tales to our clients when we see gold and silver rates coming. And certainly we predicted a number of those this year accurately. So the point is that confirmation bias, you should not fall into it. So don't go seeking out just opinions that match your own. You need to always seek out opinions that go against your own. Unfortunately, like I said, on the internet, you pay, what you pay for is what you get. So when it's free information, you might not find those relevant contrary opinions online, but if you can find them, you should go to them, and it will provide some kind of balance to your views, because the best decisions are always made when there's a diverse arena of opinions, right? Like, that's why people say that people only surround themselves with yes men that make terrible leaders, because people know, the subordinates know that, okay, if they disagree, they'll get fired. So they just tell them yes, 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 even when they think they're wrong. And that's kind of the same thing as confirmation bias, what people are doing. They disregard any information that's more realistic, that could help them make better decisions in the gold and silver arena, and they just go to what they want to believe. Now, as a last note, finally, I don't really think that the last video is going to make my point with confirmation bias, because I said that the bankers are using that opportunity on Sunday night in the thinly traded low volume markets in Asia by using their high frequency trading algorithmic software to manipulate the gold and silver prices, because not enough people had viewed it at that time when gold and silver were getting rated by the bankers, and most of these came after gold and silver bounced back in the spot price. So I believe you would have got tons of dislike. I don't even know what they are, because most of I told you my social media staff take care of that. But I didn't check because I doubt there are very many dislikes. But had gold and silver stayed at basically a suppressed price level and that rated level for many days, I guarantee you that would have got a lot of dislikes, just because it's not what people want to hear, that bankers are taking advantage of their raid into the Swiss gold vote and then continue afterwards. And by the way, silver at one point had dropped to a spot price of $14.50, $14.50, then went up close to $17 later in the day. That is a 17% swing. So why I'm saying this is it's ridiculous for people. Sure, the fundamentals have been bullish forever, but you don't get a 17% swing in any commodity ever unless it's being manipulated. So that's why I say it's ridiculous for these technical chartists that are out there saying, oh, listen to these people that, and plus they fall into that confirmation bias category anyways, because these people that are always denigrating people that say there's indisputable evidence, and there is, factually there's indisputable evidence that gold and silver prices are manipulated by pro-US dollar, anti-gold, anti-silver bankers. They will say, oh, these guys are always saying that buy gold, buy silver, and I just told you that's not true, because look at how we have managed gold and silver this year for our clients. Certainly we've been bearish, we've been out of money stocks for a while, we've taken hedges where we made some really decent gains on puts on the GLD and whatnot. So these people that say that, either they're one of two: either they're morons, because you never get 17% swing in any commodity on zero news unless it's manipulated, other than the fact that, of course, the fundamentals in the physical world, which these chartists that will say gold and silver price are not manipulated by bankers, will never look at the fundamentals, will never look at what is going on actually with physical gold, physical silver. They won't tell you, even before that 17% swing, when I looked at the price of Canadian silver maple leafs being sold by Northwest Territorial Mint, there was a 28% premium on 2014 Canadian silver maple leafs over the spot price. Okay, and that is not even going back to prior year Canadian silver maple leafs, 2012, 2011, 2007, which have a much higher premium than even 2014. 2014 coins had a 28% premium. So how is it? How is it that a real physical ounce of silver can have, and that was for less than 75 ounces, just to clarify that it is going to differ by quantity, but for less than 75 ounce purchase, that the real price of physical silver is going to be selling at a 28% premium over spot price if there's no manipulation. So obviously these people that say there's no manipulation, either they're morons, or if they're smart, intelligent people, then they are just shills for the bankers. So I don't have any respect for them, because they know that they're doing the dirty work of bankers and have sold their souls out. Of course they're not going to say that, but you know, those are the only two feasible explanations for that. So don't fall victim to confirmation bias of yourself. Don't fall victim for confirmation bias from other analysts if they are saying what you want to hear or what you want to believe that confirms your own opinions. The best opinion is always arrived at with the most diversity of opinions. So you need to always fact check your own opinion. You also need to stress test your own opinion to see if it holds up, if it has validity, and if it's wrong, if your opinion's wrong, if you think, okay, for example, that October 6th was the bottom in gold and silver, then you have to ask yourself why. You have to ask yourself if you thought the bottom was in on November 7th. Again, you have to ask yourself, am I only picking out things that I want to hear, and that is why I'm making bad decisions? And if so, recognition is the first step to overcoming that confirmation bias. So that's all for today. Thanks a lot for watching, and as always, remain intensely curious. So long.